At IND Money, we have always focused on making global investing simple and accessible for everyone. So, we are here today with Stephen Dorian, Head of Market Data and Access Services Europe for Cboe Global Markets. Cboe's data powers IND Money's US offering, and so we wanted to bring Stephen in to educate our users on the US markets. So, hello and welcome, Stephen.
Hi, thanks for having me.
Before we get into the details, tell me how would you describe what CBOE actually does?
Sure. So Cboe is the world's go-to derivatives and exchange network. So we deliver cutting-edge trading, clearing, and investment solutions to people around the world. We do that by operating exchanges and offering access to options, futures, cash equities, and FX across markets in North America, Europe, and Asia Pacific. But before we dive any deeper, I should say that the content of this video is intended for educational and informational purposes only, and should not be considered investment advice or a recommendation regarding any financial product whatsoever.
So, Stephen, you work closely with different global markets. So, tell me how is the US market actually structured?
Yeah, so the US stock market is governed by Regulation National Market System, or Reg NMS, and it's overseen by the US Securities and Exchange Commission, or SEC. And the market is actually comprised of 17 exchanges right now, as well as more than 40 alternative trading systems, or ATSs, that execute off exchange trades. I think probably what a lot of people outside the US don't know is that it doesn't matter which exchange launched an IPO, that stock or ETF becomes tradable across all of those 17 venues. Of those 17 exchanges, the big three operators are Cboe, the New York Stock Exchange, and NASDAQ. And we collectively operate 12 of them. Cboe operates four. And the data Cboe provides IMD Money is our premier data product, Cboe One, which combines data from all four of Cboe's US equities exchanges to create a US equities quote and trade speeds that is representative of the best bids and offers covering all of the Reg NMS securities. And in terms of the market makeup itself, the exchanges make up just over half of the total US volume at around 50%, while the other 50% is executed off exchange, with again the three big operators really leading the way for the on exchange market share. From a trading hour perspective, regular trading hours are 9:30 to 4 p.m. Eastern Standard Time, but some exchanges, including Cboe, offer trading for 16 hours a day from 4 a.m. to 8 p.m. Eastern, with an early pre-market and a post-market trading session as well. And there is going to be a move to 24-hour trading expected next year, pending regulatory and infrastructure changes. And I believe we'll talk about that in another video. But currently, only a handful of the ATSs operate in that overnight space between 8 p.m. and 4 a.m. But the exchanges are set to extend their hours of operation at some point in the latter half of 2026. And I think probably the final key feature of the US equities market that's worth noting is the Securities Information Processors, or SIPs. So these are entities that consolidate quote data across all exchanges and trade data from the entire market, creating essentially a single consolidated feed. And this feed is used to calculate the National Best Bid and Offer, or NBBO, and that really becomes the benchmark for best execution and order protection to ensure investors get the best possible price. And the Cboe One data we provide is a reliable, low cost, and accurate market data alternative to those SIPs.
So, Stephen, the US market is often called the most liquid and efficient in the world. So, from your perspective, what really drives that level of liquidity?
Yeah, it's a great question. I think the US is the largest consumer market in the world, um, with a GDP of more than 29 trillion as of the end of 2024. And the market capitalization of the US stock market exceeded 62 trillion at the end of 2024. Additionally, you have a very large number of participants, high trading volumes, and advanced technologies enabling fast execution and transparent pricing. I think that all leads to exceptional liquidity and efficiency. You also have a single clearing and settlement house called DTCC, so that makes for a really efficient post-trade process once the trade has been concluded for settlement. I think these equalities, they attract not just US investors, but also those outside the country as well who are eager to invest in US listed companies with global reach. I think the S&P 500 index is a great example of this. Similar to India's Nifty 50 that tracks the top Indian companies, the S&P index really tracks the 500 leading companies in the US, most of which would have a global presence. So investors can track the index to gauge the performance of the US stock market, the long-term average return of which is around 10.5%. And then I think in recent years, it's been really the boom in the popular technology-related stocks that have comprised an outsized share of that US market performance. So, to help investors better understand the performance of these companies, Cboe created the Magnificent 10 Index, which is an equal weighted index that measures the performance of 10 tech and growth oriented US listed companies.
So, Stephen, how do exchanges and market makers help make that possible?
Sure. So exchanges are neutral, centralized trading platforms where investors can trust they will have access to fair prices and efficient execution. And Cboe operates exchanges all around the world. And as for the market makers, they continuously provide quotes to buyers and sellers to ensure there is always liquidity, even during times of volatility.
So, in India, we see it all the time that one big earnings announcement or an RBI policy move, and the entire market reacts instantly. So, is the same in the US? How do company results or major economic updates move the US markets?
Yeah, I think it's the same probably globally. Investors analyze this type of information to inform their expectations about company performance, growth, and profits, as well as the economic health of the broader country. So, depending on the news, these events can typically trigger changes in stock prices or overall market sentiment, either spurring rallies or causing declines. I think it's one of the reasons that having timely access to real time data is so crucial for investors.
And Stephen, before we wrap, I have to ask you this because everyone sees it on finance channels, the VIX. People call it the fear index, but what exactly is it, and how should everybody, like everyday investors, read it?
Yeah, great question. I think it's probably the thing Cboe is probably best known for. So the Cboe Volatility Index, more commonly known as the VIX, it's a leading measure of the market expectations of near-term volatility. So since its introduction in 1993, the VIX Index has been considered by many to be the world's premier barometer of investor sentiment and U.S. market volatility. In simple terms, the way you can read it is a higher VIX index number indicates greater market volatility, while a lower number indicates calmer markets.
Thank you so much, Stephen. This has been incredibly insightful. Indian investors are always curious about the like how the US markets work, and you made it really easy to understand. Thank you so much for joining us today, and we would love to have you back for more deep dives soon.
Thank you for having me. I look forward to the next one.